Hey, Jason.
Hi, Jason. Can you hear us?
You're on mute. Seems you are muted. Jason, if you hear us, you are muted. So we're here and ready to start. Dmitry, should maybe we write to Jason on LinkedIn or just wait? Now I can hear you. All right.
I'm writing right now.
All
Jason.
right. Jason's here. Hey, Jason.
Sorry,
Hi
it took
there.
me. Sorry, I'm a bit late. How's it going?
Going great. How are you?
How you guys doing?
Doing
Fine,
great.
fine.
Can
Thank
you hear
Jason.
us? All right.
Sorry?
You hear us well, right? Can you hear us?
Yeah,
All right.
sure.
All right. Then great. Let's get started then. Just a couple of words who we are, why we asked you to join today. All right. And then let's move to the point. So we together with Dmitry are founders of a startup we called Flash. We are super early stage fintech, B2B fintech startup. So what we do, we are targeting the problem to make B2B transactions kind of more simple in terms of terms management, installments, some reconciliation issues. Basically, we are targeting US customers, B2B companies, wholesale suppliers and wholesale customers, and want to find some frictions to manage transactions between them. At the moment, we did like 70, 80 discover interviews. So our objective is to find that one niche, one like type of common problem to target at the next stage. And as of now, we found a few problem spaces. Those are cross-border credit limit management. That's one. Installments, buy now, pay later, such kind of things, terms management, and credit limits management inside US. So basically, it's all about how to find that optimal, terms, so that the deal happens. In order to better understand the market and better understand the friction, we look for opportunities to talk to people who either, founded such companies or used to work or advise, or actually are the part of the process, supplier or wholesale distributor, such kind of companies. In this, so in this term, you are like just perfect fit, since you have like exciting and really great product experience, and specifically you've been working at Balance, which is absolutely reference. So if you need more like details, inputs from our side, just to know better what we do, please.
Oh, I get it. I get the product. I was the fifth employee at Balance, so I totally get it. I get the problem. I get the industry. How can I be helpful? I guess that's the question.
Well, Balance is one of the references, same as Melio and a few other companies, but we still don't really understand the core pain point, core issues in terms of the Balance. I mean, we talk to target customers of Balance, and seems that we don't really understand the deep problem it helps to solve. So the question is, who actually the target audience, the customer profile of Balance, who they are targeting right now? So could you please share your vision?
Yeah, so I can't share too much info about Balance. I should note that I'm obviously still a shareholder of Balance, and I'm no longer on an NDA, but like there's only so much that I feel comfortable sharing without there being like an actual relationship in place. But I think most of Balance is pretty clear, in terms of the B2B commerce, B2B marketplaces, wholesalers. I think that's the target market. And Balance has got increasingly enterprise. In the beginning, it wasn't enterprise. It was also early stage startups, because there's a lot of B2B marketplaces out there that really struggled with this problem. And B2B marketplaces are growing and growing and growing, but increasingly it's going up market, especially as more B2B marketplaces are created by larger entities like Shell or those size of companies.
At the very, very beginning, we started with pretty much same value proposition as Balance. So even our, front page says that we are B2B, like buy now, pay later for B2B. When you started talking to, actual customers, we found out that it seems that they have terms, they have credit limits, so they don't see really the need of taking money from third party. And
I don't know which customers are you talking to.
That's true, but then we found out
Depends on who you're talking to. The industries are totally different. If you're a SaaS company, for example, you don't care about this. You don't need this because cash flow isn't an issue for you. If you are, if you're a B2B manufacturer, I place an
Yep.
order with you. Now I actually have,
Yep.
for $500,000, I have
Yep.
to actually manufacture this product. Net terms were created primarily for B2B manufacturing. That's why it existed in the first place. So trade credit is essential in these industries. And these companies are either they're it's not that they're not there's when they talk about credit limits, they have to evaluate, they have to run credit checks. They still have to do a lot of this stuff manually, and it takes time and slows up their sales process. So there's that value of speeding up the process. And the other value is that they don't have to take on any of the risk themselves. Right now, they're taking on the risk. So if someone doesn't pay, that's their risk that they took on themselves. Balance also operates as a lender. So there's credit risk being taken on by Balance.
At some
It's a
point,
much more difficult type of company to build because you have a lot of Balance, raised a lot of debt funding, a venture debt.
I see. And well, I'll come back to this point. At some point, we noticed that Balance and a few other buy now pay later companies switched to cross-border transactions, and also the founder of Balance claims that they raised the last round to go abroad, and we also found out that customers who do cross-border, they kind of suffer more from cross-border transactions and buy now pay later for cross-border. So what was the reason? How do you feel it? How do you see it? What the reason of
I
Balance
never
to go
thought
abroad?
cross-border it's of course it's a pain point.
Yep.
I don't believe, I could be wrong, but when I was there, I don't think Balance does that in-house. There's partnerships. No company handles payments end-to-end cross-border across all countries by themselves in-house. That's just not how it's done. You leverage other payment companies and you partner with them. And primarily those cross-border relationships are necessary just to support certain customers. Customers want the other benefits, but they can't work with you because you don't know how to facilitate cross-border payments, and they have customers in Europe, or they're Canadian and they have customers in the US, or they're American and they have customers in Canada. There's so many different use cases. The difference between a Canadian company accepting money from the US and an American company accepting money from Canada, there's differences there. You have to factor in currency rates. You have to factor in, there's so much complexity under the hood there that it's definitely a need, but that wasn't Balance's core value add.
That's
The
actually
need was, but to be considered, you need to do that.
it seems to be kind of tricky, since you have like huge US market, like tons of suppliers, buyers, wholesale companies, and seems that you have like 100 years of working just on this single market. But for some reason, you go abroad and take all these additional risk, complexities with currencies, with legislations, regulations, etc. So for some reason, either there is like some frictions inside the market that push you out of the market, saying that the real problem is on cross-border, but not here. Or, I mean, what drives to go cross-border, since you have B2B transactions inside the country with the same.
Yeah, but a company, just because I'm an American company doesn't mean I don't need cross-border payments. No large company, they don't want to deal with 5 payment vendors. Imagine I'm Shell Oil. I'm an American company, right?
Right.
But I have buyers in Europe and I have buyers in Africa. I'm just making things up. I have buyers in South America. I still have to sell to them. I'm not going to now create a marketplace. I'm not going to have one payment partner for this country, another payment partner for this country, another payment partner for this country. That's so much to manage. They don't want that. So they go to either they go to some big consulting firm, or to Miracle, or to like basically one of these bigger players that's in the enterprise space, and say, how the hell do we figure this out? Balance, to be able to take on those customers, had to solve cross-border, but that's not the value add of Balance. That's just a necessity to be able to address certain customers. If you want to help enterprise, they need to be able to sell globally.
I see.
Balance we lost a deal with SAP. It was a massive deal. Because we couldn't do cross-border and we weren't going to get there anytime soon. It was like a consistent thing. If you can't, like, no massive enterprise is selling just in the US.
I see. So since you go like up market to enterprise, you have to, it's just like a part of the product. It should be, you have to, but
Exactly.
it's not the core value.
Exactly. No big company is selling. Any company that's selling outside of a US company that's selling outside of the US still needs cross-border.
I see.
To handle
Well, since cross-border is not like the core value, what's the core, value proposition that actually triggers you to, give it?
So I would say it's complicated. It's
Can imagine.
very complicated because how I'm sure as you dive into it, B2B fintech is very complicated. There's so many intricacies in every single use case. And especially if you're selling enterprise, you're talking about a sales cycle of a year. At least. That's like a good sales cycle. And so the value adds here, it depends on the company's size and it depends on what they're building. I would say the biggest value add is if you're a B2B marketplace, payments are impossible to manage. They're just impossible to manage. Payments are really hard if you're a B2B marketplace because you have sellers in these countries and you have buyers here. You have to manage net terms between. Imagine if you're a B2B marketplace. I can't offer you net terms if I'm a marketplace. I don't have that capital. I'm a marketplace. I have to, they're the ones who need it. You know what I'm saying? And then I have to not only offer, I have to get money because I can't do a credit check on their behalf and them approving me. I need a third party to take on that risk. That's not my business. So that B2B marketplace, I mean, there's so much more complexity there. I would say the biggest need was payments in B2B marketplaces. That was just not solved. That's probably the biggest need Balance solved when it came out. In terms of other areas, B2B commerce in the wider, it solves a need. It's not, there are other players in that space that also solve the need. I think the way Balance would differentiate itself today is probably more of an all-in-one answer. That it does all of these different things, whereas most of the other payment solutions out there do one of these things. I think it's the fact that Balance does the credit itself and not with a third party makes it much faster, lowers your need. Like, because it's a real problem. Imagine you have a $500,000 transaction where something went wrong there. You don't want to have to deal now with a company and then they have to deal with the bank and then back and forth and back and forth. And this is a big deal for your business. You can't deal with that. So having Balance take on the credit decisions, I think is a really big value add. And I think collections and invoicing are very, very important. I think that's also very important.
What we found out during our discovery interviews is
but I don't think B2B checkout
sure.
doesn't. Sorry, that's the only last thing I'll say. B2B checkout does not exist. It's not real. It's fake. B2B checkout exists in small industries. It's a nice dream, and people who use a Balance type solution are going to be interested in it because it's a nice dream and that's where they want to go. And maybe eventually it will happen. It's not this industry is not there yet. Right now, there is no way I'm charging you by card on a $500,000 transaction. There's no way I'm letting you do that. Like I can't afford that. I can't afford to lose 3% of a 500K transaction as a B2B manufacturer. My margins are too thin, especially as a B2B marketplace. And so you need to be able to handle the invoicing. And if you think about just think about the buying process in a real business. There's no such thing. I can't just buy something for $500,000 on an invoice and pay for it. It just doesn't. It goes to my finance team. It needs to get approved. There's just procurement processes.
Procurement, yeah,
deal with.
absolutely.
So you can't pretend that these processes don't exist.
That's actually the issue. I mean, we kind of stuck. We see that there is like a whole bunch of companies claiming that we offer you like customer-like B2B checkout experience. We go to B2B marketplaces, which say that we don't have B2B checkout. And we see resistance. We see that companies say, we are not going to give up, payments and money flow to third party. Because we as B2B marketplace, we are trusted,
That's very strange.
Okay.
I don't know who these companies are, but if they're legit big companies, that's shocking to me. Because from my experience, companies that are aiming to be huge want to give up this. They want to get rid of this as soon as they can. Massive companies, enterprises do not want to deal with this because this is not their business. They don't know. It's why Stripe is so successful. Why is Stripe so successful? Shopify is basically a glorified Stripe reseller. Shopify, I think like 70% of their revenue comes from their Stripe partnership at this point. Shopify is a payments company today, and they are still never. They have the Stripe team obviously dedicates an entire product team to the Shopify integration.
Yep.
But to ShopPay, but Shopify will never build their own payments company. It's just not worth it for them. It's so hard. Like if these B2B marketplaces want to build their own payment solution, they're never going to be able to be cross-border. They're never going to be able to sell. They're never going to handle a lot of complex use cases in a simple way. It'll always be an annoying process. So they're going to get left behind. Over time, they're going to get left behind by the new wave. Companies are increasingly making it easier to buy. No, it's not B2B checkout, click buttons like you're a consumer, and it's not that simple. It's a nice story, but it's not that simple. But you can still make it a much easier experience. I'll give you an example. I run basically a B2B marketplace today, and I get a buyer in, and I have to. Right now, I run it differently. I actually have them go direct, and I have the seller pay me a commission. But obviously, it's a more annoying way because there's a lot of extra payments. But you don't want to be in the play. I don't want to deal with that. I'm not going to build a payment solution. That's not my company. That's just never what I'm going to do. But I do need to make sure it's all invoice based because none of my sellers want to lose 3%. Like that cuts into my margins also. If I take off 3%, then instead of making 15%, I'm making 12%. And that's like a big part of my margin, right? 3% isn't big if I'm getting all of the income. If it's all going to my business, maybe it's not that big. But 3% when I have my 3% to 15%, think about it. It's 20% margin, 20% of my margin.
Absolutely.
20% of my revenue, my take rate.
As a marketplace.
So if I give up 20% of my revenue to a payments company, that's insane. So that I can understand why they wouldn't work with external providers just because of that, because it's so much cheaper and you save so much by doing it the old-fashioned way. But it doesn't mean you want to do it yourself. You just want to be able to do it via invoice, and you want to be able to pay differently.
Let me tell just a few words as a story of our discovery journey, what we did first, and I would be happy to get your feedback of where the pitfall was. Maybe we just didn't notice some signals that there is a friction. So first we see balance. We see balance, and we assume that there is still space in buy now, pay later, and the B2B checkout. We go to two segments. First is B2B marketplaces. That's AgTech, that's heavy industry, but B2B marketplace, and just middle size, selling food and beverages, spirits to small businesses. I'm as a like small business can buy something by wholesale and just sell in B2C. So it's not like none of them is enterprise. We did interview some guys from PepsiCo, some Procter & Gamble guys, but they do their own procurement with no B2B marketplace involvement, as they said. So we focused on middle size B2B marketplaces. They are niche B2B marketplaces, agriculture tech, perishable goods, seeds, some, even wheat, B2B marketplace, spirits, etc. So that's niche for small businesses. We ask, do you have some frictions in payments or some frictions inside conversion or over average order value, so that we go there and boost average order value or conversion by implementing additional payment methods or installments, buy now, pay later. Customer comes, we assess risk and provide instant installment. They say, you know what, two options. First option, they say, we already have that. We try to do it by ourselves. Some of them even, kind of provide installment, but cover the money from the investment cash. Some of them even claim on their front page saying that we have B2B. Dmitry, how's called the biggest B2B marketplace? Fair.com, right?
Yeah.
Right.
So something like that. They claim that we have buy now, pay later, but in reality, they built by themselves. There's no balance there.
Fair did. I know Fair example. Fair is very different because they needed it at a time when no one had it.
Droppy. Do you know Droppy, European one?
No, I don't know Droppy, but I know Fair well. We spoke to Fair plenty of times. Like
Yeah.
I spoke to the Fair CEO. We spoke to them plenty of times.
Yep.
We had a lot of meetings. It just wasn't. They didn't want to do it themselves. They had to do it themselves. And then once they had done it, they still had to integrate other payment partners in the background. It's not like they're doing it. When I say they're doing it themselves, they're not doing it themselves. They didn't need the front end provider. They didn't need the all-in-one solution. They were specifically fine handling a bunch of different solutions because they'd already built that top layer. And it would be too challenging. It gotten to a point for them where it would be too challenging to switch than to just continue adding on to what they were doing.
So at this point, we decided to move forward from B2B marketplaces because we see either they just have resistance to integrate third party as payment method and installments, claiming that we already are third party for supplier and customer. We're third party. And if we give up this money flow to fourth party, to additional partner, that could be kind of create some misunderstanding for sellers and buyers. So we have to integrate it build it in our platform and basically do it by ourselves. We try to, propose some white label solutions so that they put it as their own, but it didn't really work out. So we didn't found any positive feedback. That's maybe on our part, but still we moved forward to B2B supplier and manufacturer and customer.
But again, I don't think it's BNPL that they're looking for. That's part of what they're looking for. BNPL is a part of the solution. They're not primarily looking for BNPL. They're primarily looking for easier payments for their, you have to, I feel like, and I could be wrong, and sorry, we only have a couple, I can go a minute or two over, but it sounds to me like you guys saw a product tell me if I'm wrong, you saw a product or a market and you went after that, I would shift the approach to thinking about a problem.
Yep.
And an audience that has that problem and solving that. Because that's if you start with BNPL for B2B, there's still room in there. That's not the problem you're solving. You're not solving
Absolutely.
that's not a solution. I mean, it is a solution, but you're taking a product and trying to turn it into a solution. Think about what the problem is and solve for that. If you go to B2B marketplaces and say, hey, is payments a friction for you? If any of them say no, I'd be shocked. If they're being honest. Some of them will say yes. Some of them will say no just because they're arrogant and whatever. But it's going to be a friction for them. Payments. It's going to payments and dealing. Either it's a friction for their buyers or it takes a lot of work on their end to manage it all. And they're doing a lot of manual work and they have a bunch of bookkeepers actually doing manual transfers if they're doing well, right? If they're not doing well, they don't have any issues. And by the way, that's also something to consider. A lot of B2B marketplaces aren't doing well. They don't actually sell. They just look like they're selling. And so I would think about that first, because that was the crack at Balance. I came in and we were all over the place and then focused in on a specific audience and a specific pain point.
Did you
focus the buyer experience
on payment side, not only like providing buying this
we didn't
installments?
talk about that. Wasn't the messaging. Packaging is important. The messaging wasn't about the reason B2B checkout was powerful from a messaging standpoint is that it, for the companies that are like, we want to build a marketplace. We want it. Our dream is to get to the point where we're selling in clicks. Balance was the right partner for them in their head, because that's how you get the innovative companies that were looking to have a best-in-class buyer experience. But the payments is just part of the buyer experience.
I see. I mean, it's super clear if we talk about B2B marketplace as a customer, because they're a service company and they want to provide best-in-class experience as a part of this whole service. But if we go
distributors, manufacturers, they all need that.
They all need that.
Every company needs to provide, like, there isn't a company in the world that doesn't need to provide a great buyer experience.
Maybe
every company in the world can benefit from having a better buyer experience. The only companies that don't need a better buyer experience are the ones that have a product so unique that they don't even need to sell it. People will work to use it. That's the only companies that don't, like, they have that unique of a product. I have to jump. Go ahead. Sorry. I have to jump. I can give you 1 minute if you want to sum up or stuff.
How much we have?
I have I'm already a couple minutes late, so I can go until I told them I'd be 5 minutes late, so I have to go in a minute.
In a minute. All right. So just could you please just summarize? I mean, the idea was to understand the, who the customer segment plus pain point. Could you please just in one sentence sum up for such kind of companies like?
And it's so. You're also talking about a pain point 3 years ago. Time moves fast. I don't think that pain point exists anymore. I think they think that problem has been solved. I don't think it's different
as of now.
As of now, I'm not in. Look, I'm not in that industry anymore.
Yep.
I haven't operated in a few years. I still think I guarantee. Basically, there is still a problem. The high level problem is that B2B needs to move online to be able to sell more. Just like B2C needed to move online to sell more. Everything that happens in B2C ends up going to B2B eventually. It's happening in B2B. There are a lot of companies that are selling digitally. Now, the challenge is, how do you make that process happen better for B2B? It's probably not, for example, e-commerce as we think of it. Because if I'm a manufacturer where I have 1 million SKUs, because each little product has a tiny little differentiation because it's like really complex products, that like machinery products, then I don't want as a customer, I don't want to go through and and have to find the perfect thing for me and not know if I'm buying the perfect thing and have to deal with that. you need more assurance when you're doing those types of purchases. So the real problem is that B2B companies, physical manufacturers, distributors, wholesalers, marketplaces, they know they need to go online. They know they need to create a buyer experience. They don't know how to. That's not their expertise. That's the real problem. There's a lot of solutions within there.
So it's all about customer experience and B2B, like customer-like experience for B2B.
Well, it's about driving more revenue via better by making it easier for people to buy from you.
It's not revenue. All right. It's not like cost-saving issue, like spending less time for account payables.
It also is.
Also is.
They don't want to spend. Like, that's how they compare solutions. Ultimately, what they're trying to solve is make more money by going online. Now, when they compare different solutions of doing it in-house versus doing it with a partner versus doing it with this partner, costs matter.
I see. Have to think about it too. Quite an important insight you provided. Thanks a lot for that.
My pleasure. Let me know if I can be helpful further. Be happy to. Cheers, guys.
It was really impactful. Thanks a lot. Bye-bye.
Ага, так, я удалил второго. Второй аккаунт. Блин, ну интересный чувак, да, вроде бы.
Нет комментариев. Его надо на 3 часа сажать и допрашивать. Но он очень быстро, я вообще за ним не успеваю. Я тугой, мне нужно мысли один к одному, а он прям очень быстро и бегает, и типа плавает, а у него вопрос недостаточно, видимо, глубокий, чтобы его заинтересовать. Короче, что я понял? Давай по вопросам, которые здесь, что удалось отбить.
Давай уже скайп, через 2 минуты закончится тариф. Ой, этот.
Давай.
Давай в скайпе.
Давай.